I'm here with the investment team, specifically James Timpson and Jake Reynolds. Our market update this month will focus on the quarter. And James and Jake have kindly put together a very comprehensive write-up of what's been happening throughout the quarter this year. And I'd like to ask you both a few specific questions on that, if I may. So, James, Courtiers fund performance over Q1. That's what everybody's thinking about. Tell us about it.
Yeah, well, the good news is it was a really positive quarter for markets. Investors are reacting positively to all the speculation that rate cuts may be on the horizon. Inflation's also been coming down. So markets have been more or less positive all round. So the cautious risk fund, that returned just under 2% during the quarter. The balanced fund around 3.5%, and the growth fund just under 5%. But all 7 of the Courtiers funds were positive in the last 3 months. I mentioned inflation. During the quarter, the CPI came down from 4.2% to 3.8%, and it's down from about 9.2% a year ago, so it really has come down quite a lot. So equity markets have been positive during the month. The FTSE 100, for instance, that was up 4%. And the US, the S&P 500, that's had another good quarter, that's up around 10%. So there's been a lot of optimism amidst investors at the moment.
Jake, are you happy with the performance so far this quarter of all the Courtiers funds generally?
Yeah, it's another good quarter off the back of Q4 last year. It particularly came at the end of October, where we start to see a bit of relief of rates, and now the Bank of England are guiding that inflation will be below target in Q2, which is really exciting, because it's been nearly 3 years of high inflation. This is the lowest it's been since sort of September 2021, and rates will create a more sort of risk appetite within markets to invest in. So we're quite looking forward to that.
Sticking with you, I wanted to ask about the diversification in the funds, which is essentially the security of clients' money.
Yeah.
So what are you doing to maintain that? And how does the quantitative equity selection model you mentioned in your summary contribute towards that diversification?
Yeah, well, we wrote together a good piece, James and I and yourselves, about diversification, because everyone thinks about trying to don't put all your eggs in one basket. So with Easter this month, we released that. So but it's really about building that broad diversification, not congregating in pockets of risk, and that's what's going to drive your long-term returns. And it's about staying in the game as long as possible, because that's what is ultimately going to be the real wealth builder over the long period. So diversification is super important in this space at the moment. The market looks on a broad perspective looks incredibly attractive, but there are some pockets of very, very expensive stocks, particularly across the pond in the US, and we're trying to build away from those. So using our tools to find pockets of value and then build a big diversified pool of assets for clients that exhibit these factors.
Again, in the summary, and James, if I can ask you, there's mention of Germany and Thai banks. Is the global diversification among the Courtiers funds broadening?
Absolutely, yes. I mean, if you look at the MSCI World Index, which tracks the global market, you'll see that it's about 70% invested in the US, which is incredibly concentrated. So we try to be a lot more diverse than that. And as well as investing in broad indices, one of which recently is the DAX index, that is the German large cap stock market index. We've been investing in that this quarter because Germany is currently showing in our fundamental index analysis as being good value. It currently has things like a low price to earnings ratio, which means that its stock market is cheap relative to other stock markets. But as well as that broad exposure, we've been investing more in direct stocks, which are chosen by the quantitative equity selection model. So in the last quarter, for instance, we've invested in stocks such as Unipol Gruppo, that's an Italian insurance company, and those Thai banks, they've gone into our emerging market portfolio to give us some broad exposure to the Thai finance sector. Also things like Mitsubishi Chemical Group, that's expanded our Japanese portfolio. And some individual German stocks as well, such as Mercedes-Benz and Siltronic, which is a silicon wafer producer. So we've actually, over the last quarter, been finding lots of value opportunities, both in individual stocks and in broad markets.
Fantastic. It sounds like, as a team, you're all keeping on your toes. Thank you for that. Throughout Q1, have there been any surprises that you've experienced?
I think with inflation's a big one because it's been such a big determinant of risk appetites in markets. So that easing is going to be really interesting. It's going to be sort of a big sort of reset on markets, and so we're going to be really looking to see when the central banks pivot, and Gary will be writing about that throughout the year, and that's really what everyone's watching with the Federal Reserve and with the Bank of England. And you can see that with our German position. You know, Germany's had a really tricky 2 years with the Russian invasion of Ukraine. You know, they get half of their gas from Russia, so they've had to pivot. They were the only G7 economy to shrink in 2023, and now they look to return to growth in 2024. So building a position there when it looks really fundamental, and the pivot that they've done with their energy supplies is incredible. So we're excited about that. In terms of surprises, really it's been quite business as usual. And looking back at this Q1, like a year ago we had Silicon Valley Bank blow up, which caused a lot of volatility, and the year before that was the Russian invasion of Ukraine. I mean, this Q1, James and I are thinking what could be coming up next, but luckily there's not actually been many surprises, and it's allowed us to just focus on where we can find the value and build that into portfolio.
James?
Yeah, just on the volatility actually. You may remember that chart I put up in the seminar in December, which showed how many times the market moved more than 2% in a day, and it ended up being 0 last year. So even though there's a lot going on, markets aren't sort of bouncing up and down day to day. And that sort of continued into this year. So volatility has stayed low. And that's enabled us to engage in more option purchases. So buying call options on the FTSE 100 index and the S&P 500 index just enables us to add some layer of protection into the funds should there be some major crisis around the corner.
Thank you both very much. We'll leave it there for now. If you have any questions around the written summary, please do speak to your advisor, and they'll work with James and Jake and the investment team to get you all the answers that you need. James, I'll look forward to meeting you again next month for the regular market update. Jake, thank you for joining us for this quarterly update. I hope to see you again next quarter. For now, thank you both. We'll see you again soon.
Cheers. Thanks, Lee.
Thank you.
Thank you very much. See you soon.